Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. So we're continuing our dancing in the range while market stands in 112, 114.50 area. We're mostly watching for short-term setups that could last for 1-2 sessions maybe. So on Friday it was dramatic action, so we have warned you in our weekly report that it will be the press conference of Jerome Powell and Federal Bank of Atlanta. And that was very contradicting to non-farm payrolls results that was released in the same day. So first we've got the significant downward action that mostly was a logical agreement, in agreement with our suggestion, but after that the direction has changed and market returns right back up. So in general, guys, as we have discussed today in our weekly report, short-term background for the dollar is not very supportive. So we see the hints on the dovish policy from the Fed. We see some disagreement between the Trump and Congress, and they can come to agreement in the budget spending. So the shutdowns a bit lasts too long. So and everything stands some kind of the stability or some clear direction. So all this stuff press on the United States dollar. Mostly, of course, this is the anticipation of the Fed policy. So it stands really different compared to what market have expected previously. And that probably will become the source of the weakness in the beginning of the year. From the technical point of view, we start to see some potentially bullish patterns on weekly chart. So if you're interested, you could read the weekly report. They are just on the paper yet, but we can't exclude that they will be formed. That's why we need to keep an eye on possible upward action. Also, we have the new yearly pivots, and yearly pivot point stands at 117.40. So that will be also important level, and if market somehow will start upward action, so the 117.40 is the first target that we will be watching for. Meantime, in the video we'll talk on a short-term setup. So let's recall what we talked in the previous week. So we said after the pullback, expect the downward continuation. This downward continuation has happened here, but it was interrupted by the results of the Jerome Powell speech. Now, if we will take a look at the daily chart of the dollar index, so we see here not very good for the bearish setup, not very good sign. Let's take a look. Actually, we have here bearish grabber on a daily chart that suggests the taking out of this loss. It means that in the nearest term, chances on the upward continuation on the euro currency better than the downward continuation. Despite that, you see here some also kind of the grabber, but this grabber is weaker than on the dollar index, because on the dollar index it stands in a direction of the previous tendency, while on the euro it stands against the previous direction. So it could mean that downward continuation here based on this reversal session was really small. So if you haven't taken the profit at this drop on the non-farm payrolls list and you keep shorts, you have to have your stops on the break-even already, because market has shown very significant pullback here. It's approximately for the 60 pips to the downside. If you think about taking the short position, we should warn you that currently it's better to postpone this action, postpone this idea, because if we'll take a look at the first is all the stuff that we have talked here right now. Second, if you'll take a look at the 4-time frame chart, let's see what we have. That's our C point. So that's our continuation that we have talked about, but we were expecting to see the CLP target has been hit. But instead of that, after 60 pips down, market turns up again. So theoretically, market still stands in the same resistance with this monthly pivot point, and theoretically, A, B, C pattern is still valid. But what this response means, guys, first of all, from the pivot framework, take a look what really has happened. Market has collapsed right to the pivot support 1. And the pivot support 1 has held the drop and pushed prices back to the weekly pivot point. So it means that this is kind of the retracement. This market returns right back up to the pivot. As a result, it could mean that market could continue move higher to pivot resistance 1. In general, this action with the dropping to the pivot support 1 and returning to the pivot point, this is the bullish sign, guys. Second, this collapse that has happened on the non-farm payrolls is actually the new grabber, and it's bullish grabber that suggests action above the stops. Yes, this is near the target, but that could have the really significant consequences. This is the bullish grabber, guys, and potentially this price action could lead us at least to this pattern on the hourly chart. I would not even mention right now the possible upward continuation, breaking of the 115 area and so on. Even shorter term destination point is the 1450 area. So this kind of the ABC pattern and possible guardians people to sell. Potentially it even could turn to the butterfly, but this is another story. Currently, guys, with all this background that we have, I would wait I would postpone the taking any shorts position. Particularly speaking, until market will break these lows. If market will drop again back down, taking out of these lows, then could give you real hope that indeed market could continue to move high. But currently, on all these patterns that we have, taking in consideration what we have on the weekly chart, on the fundamental background, what we have on the dollar index, and here, I would suggest that bullish setup has a bit more points in its favor compared to bearish scenario. So if you have the bullish view on the market and you're searching chance to go long, you could focus just on the grabber that we have on the 4-hour time frame chart. Because on the hourly chart, you can see it's kind of the bullish engulfing. Here you just could wait for some pullback here to some support area. Your invalidation point will be right below these lows. So here maybe kind of the catalyst triple to buy even will be formed, something of that sort. So as you can see, for bulls, it's a bit more simple scenario than for the bears. Bears needs to wait the breakout of these lows and see reestablishing in downward direction. Currently, based on information that I have read today on the fundamental background and most important things I put in the forum, in the first few weeks of the new year, maybe even till the end of the January, it seems that dollar will be under pressure for some time. So that's our current view on the euro currency. As you can see, we still mostly focus on the very short-term steps because long-term direction is still unclear. So we're working in 112, 115 area. And that's the pattern that we'll be watching for in the coming week.